All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about RIOT Blockchain, stock ticker RIOT. They are a Bitcoin mining company. We cover Bitcoin and the Bitcoin miners all the time on this channel, so if you're new to the channel or if you have not yet subscribed, please do us a favor and subscribe and hit the notification bell. Also, if everybody could smash the like button, that helps out the channel a lot. I really appreciate it, and feel free to drop a comment below. RIOT just put out their June operational report, so I want to go through that June report and talk about their performance in June, talk about in general what's going on with RIOT. I want to look at their balance sheet and look at their liquidity situation and talk about their ability to get through a crypto winter. And lastly, I'm going to quickly go through, there's a proxy vote coming up. There's an annual meeting, and there's one particular question on there that I think has people a little bit curious. So I'm just going to go through that a little bit and give you my opinions on what that is. So it was down about 4% on the day. That leaves them with a market cap of $613 million. A couple things I want to say about that market cap. The first one is this was almost a $6 billion market cap company. So they are now down to $613 million. So that's almost 90% decrease, and you'll see their stock has actually decreased a little bit more than 90%, the difference being dilution between now and then. The vast majority of the decrease of the price of their stock is due to a decrease in market cap. Okay, so having said that, as of a couple of days ago, RIOT became the largest market cap of all the publicly traded Bitcoin miners in North America on the NASDAQ. So RIOT had been in third place market cap size for most of the year 2022, behind Core Scientific and behind Marathon. But as of recently, just over the last few days, they have passed both of those companies, and they are now the largest market cap. Now, when I say that they passed them, all of these companies are declining right now. Obviously, Bitcoin is in a pullback. All these market caps are in a pullback. The stock prices are in a pullback. However, RIOT has fared better than the other two companies, and in doing so, it has now become, for the moment, the largest publicly traded North American mining company. And I think that is indicative of their performance and their strength of balance sheet. So we're going to look at both of those things. So let's start out by taking a look at their June operational report. All right, so Bitcoin production and operations update. In June of 2022, RIOT produced 421 Bitcoin, an increase of 73% as compared to June of 2021 production of 243 Bitcoin. So obviously nice growth year over year, but on this channel, we like to look month over month. We look for sequential growth. And I will tell you, over the last 2 or 3 months across the Bitcoin mining industry, we've seen a lot of companies go sideways on their Bitcoin mining production and stay fairly steady. And some of them have decreased, and RIOT is falling into that category. So I'm going to show you what they did in May, and then I'm going to talk about the reasons why they went down, because they do go on to explain why they went down. And then I'm going to give you a reason on top of that why I think all the Bitcoin miners are powering down a little bit over the last few months, particularly in June and now in July, with Bitcoin down at around $20,000. Okay, so here's last month's operations report, May 2022. RIOT produced 466 Bitcoin. So they went from 466 Bitcoin, and I'm also going to point out that they were at 4.6 exahash. This month, they went to 421 Bitcoin, and you'll see down here, they're at 4.4 exahash. So not only did they produce less Bitcoin, they're actually at a lesser hash rate, and there's 2 reasons that they cite for that, so I'm going to go through those 2 reasons. First, let's just finish the summary here. As of June 30th, 2022, RIOT held approximately 6,654 Bitcoin, all produced by the company's self-mining operations. So they are doing a combination of holding some of their Bitcoin and using some for operations at this point. So they've been maintaining somewhere over this 6,000 Bitcoin, and they do seem to save a little bit each month. So here they say in June, RIOT sold 300 Bitcoin, generating net proceeds of approximately $6.2 million. RIOT currently has deployed a fleet of 42,455 miners with a hash rate capacity of 4.4 exahash per second. So as we noted, that's actually down from May, which was 4.6 exahash per second. Okay, so they go on to explain that. First, there's one more thing in the middle, and then we'll get to why their exahash rate went down. Okay, we are pleased to report that during the month of June, we achieved full operation of all 23,000 S19 series miners in the first immersion cooled building at our Winehouse facility, which is Building F, said Jason Less, CEO of RIOT. We initially conceived of plans for the immersion cooled building just 12 months ago, and we are proud of our demonstrated ability to fully execute our plan as such a rapid rapid timeline. Our Winehouse facility expansion project now continues on to our second immersion cooling building, Building G, where the initial miners are deployed and hashing. So we're going to have to see how that plays out over time. Obviously, they're just getting this up and running, and you're going to see next that there's a few things that actually held them back on exahash rate in the month of June. So let's get to that. They say, additionally, in June, we began our annual participation in ERCOT, or ERCOT's 4 Coincident Peak, 4CP program, in which we curtail our energy consumption when called on by ERCOT during the 4 summer months of peak energy demand in Texas. So they are involved in a curtailment program. In other words, they use a lot of energy from the grid. So in Texas, during the 4 summer months that are hot, they willingly participate in curtailing the amount of energy that they use as needed so that the grid can stay up and running and properly supported. While participation in grid programs like 4CP impacts our Bitcoin production, we view this as an important part of our partnership-driven approach with ERCOT and our commitment to being a good corporate citizen in our communities. Participation in the 4CP program also reduces Riot's energy costs in the preceding year. Okay, so that is one reason that their Bitcoin mined in the month of June went down from the month of May. They did participate in this curtailment program. The second reason is this: mining deployment and shipment update. As a part of its vertical integration strategy and to lower its operational expenses, Riot announced that it had begun transitioning all of its miners hosted at Coinmint LLC's Messina, New York facility. The transition will consist of both a relocation of miners to the company's Winehouse facility and by way of a miner swap agreement with Riot has entered into with another Bitcoin mining counterparty. This initiative is underway and approximately 5,700 miners are currently offline. So this explains the 4.6 move down to 4.4 exahash. They got 5,700 miners in transit essentially that they took offline. However, they go on to say, as a result of the relocation of miners, the company expects to further reduce its cost of production through lower power costs and by eliminating all third-party hosting fees on its hosted mining fleet. So this is part of their vertical integration. They're getting rid of any hosting fees. In addition to that, their power cost at Winehouse is lower than it was in New York. So for all those reasons, they're getting out of New York. They're not the only ones. So they did take those offline temporarily, but they then go on to say, since its last monthly update, Riot received an additional 1,273 new S19J Pros, and they deployed 4,676 S19J Pros in its immersion-cooled building with an additional 6,324 miners staged for deployment. Additionally, shipments of 6,333 S19J Pros have been initiated out of Bitmain and are expected to be received during July 2022. Upon deployment of the staged miners, the company expects to have a total of 48,779 miners deployed with a hash rate capacity of approximately 5.0 exahash. So I would expect sometime maybe in August they'll reach 5.0 exahash. Their exahash rate should certainly go up in July, although they will still be transporting machines from New York to Texas. But in addition to that, they're going to set up all these new machines. I would expect by the time we get the August update that they will be at 5.0 exahash or more. So while I don't love the fact that they went down to 421 Bitcoin in the month of June, I think they did do a very comprehensive job of explaining why they went down to 421 Bitcoin produced, because at 4.4 exahash, they really should be producing a lot more than 421 Bitcoin. Riot has been operationally pretty much staying on plan over the course of the last year or so. So the last thing I'll put is they talk about their estimated hash rate growth, and they say by January 2023, Riot anticipates a total self-mining hash rate capacity of 12.5 exahash, assuming full deployment of approximately 115,450 Antminer ASICs, but excluding any potential incremental productivity gains from the company's utilization of 200 megawatts of immersion cooling infrastructure. So we're going to have to see at that time just how much benefit they're getting from this immersion cooling. The stated hash rate on the machines that will be deployed will be 12.5 exahash. And like I said, they've been fairly on track with this plan. This has been their plan for a while. It has changed by, 0.2 or 0.3 exahash here or there, but in general, this has been their plan and they seem to be on plan. I want to take a quick look at their balance sheet and just talk about the fact that this company has an extremely strong balance sheet. You'll see $439 million of current assets. They have $1.5 billion of assets, including over $333 million in deposits on machines they are still receiving over the next 6 months. So when you put that against $160 $162 million in total liabilities. That's $1.5 billion in assets, almost 10 to 1. I considered this number 2 on my list of companies most likely to survive a crypto winter in the event that things got worse than they are right now for some extended period of time. So again, that is not financial advice. That is my opinion, but I mainly base that on the fact that they have a very strong balance sheet. Okay, I quickly want to talk about this proxy statement that if you're a shareholder, you may have received one of these, and there's really one item on this. I think they're voting on 5 or 6 items, but there's one I think that has people concerned. Item number 4, to authorize and approve the company's current articles of incorporation by amended to increase the number of shares of common stock authorized for issuance thereunder from 170 million to 340 million shares. Now that doesn't mean they're going to issue those shares. They're just going to be authorized so that in the future they have the flexibility to raise capital through equity. So this is a point of contention with a lot of people. I know that there's a lot of people are worried and they get nervous when management raises capital and it dilutes your shares of stock. So my only thing that I would say is if you look at the balance sheet that we just looked at, the reason this company is so strong and the reason they have such liquidity and so many more assets than liabilities is that when their stock was at the right price, they did do dilution and raised a lot of money. I trust them to have additional authorized shares and to use them wisely when needed, because one of the reasons of going public is raising money. So to view that negatively just across the board doesn't make sense to me. They're not actually going to issue shares of those stock. They're going to authorize shares so that at some point in the future they have the option to issue those shares when and if it's needed. Okay, lastly, we'll just take a quick look at the chart. So you'll see that Riot is trading at $4.53, and this is before the market opened today. So this was as of the close yesterday. So I'm just going to measure from May 31st until today. So that's just a little over 1 month. So you see Riot's down about 42% in the last 1 month. Now, Bitcoin in that same period of time jumped from around 29,000 down to around 20,000. So all of the Bitcoin miners had a fairly big pullback in that period of time. Riot is no different. They are down over 90% from their all-time high, which was early in the year 2022. Also, if I measure just from March 28th, so that was just a little bit over 3 months ago, Riot is down almost 81%. And again, this is very consistent with all of the other publicly traded Bitcoin miners. If Bitcoin gets healthy, I feel like there's some potential price targets here with some decent upside, even if we're only talking about a relief rally that lasts a few weeks or a month. If we just look at Riot getting back to where it was on May 31st, so again, that was just a few days over 1 month ago, that would be almost a 70% increase in the price of their stock. So, we don't know where Bitcoin's going. We may not have hit bottom yet. We may be bouncing along the bottom, but if at some point in the middle we get some relief rally, I look at this as a potential price target. And again, this is not financial advice. Please do your own due diligence. You can see this stock's down 80% in the last 90 days. So these are very volatile stocks. So please invest wisely. That's all I got for you on Riot for right now. Thanks so much for watching. If you made it this far, please remember to subscribe to the channel and smash the like button. Thanks again, and we'll see you in the next video.